Hey there, my fellow financially savvy Gen Zers. Are you ready to flex your credit score like a boss and buy your first home in Australia? Well, before you start dreaming of your dream home, you need to check your credit score like a pro. Lucky for you, I've got some practical tips to help you out. So grab your avocado toast. Just kidding. Here are 3 things you need to do to check your credit score as a first home buyer in Australia. And of course, don't forget to hit that bell notification button and make sure to stay to the end of the video as I'll be showing you some credit report reading hacks that you can use to read your reports and understand what the bank thinks of you. I call that bonus tips, so let's go. So here are some practical tips on how to check your credit score as a first home buyer in Australia. Your credit score is a number between 0 and 1,200 that reflects your credit worthiness or how likely you are to repay a loan. The higher credit score, the more likely you are to be approved for a loan and the better interest rates you'll be offered. Checking your credit score is an essential step in preparing to buy your first home, as it can give you an idea of how you'll be viewed by lenders and how much you can borrow. So here are some practical tips on how to check your credit score. So number 1, use free credit score services. There are several free credit score services available in Australia that allow you to check your credit score online. For example, Credit Simple, Get Credit Score Finder, and there's another mobile app called We Money that I promote on TikTok that you can go in and get your credit score. Now, these free credit score services provide you with a credit score, your credit report, and also some useful tips on how to improve your credit score. But again, guys, these free credit score companies will send you tons of ads. So if you want to engage my services, I can actually give you a free credit score report, which I actually personally pay, and the company I use is Equifax. And number 2, guys, check your credit report for errors. It's essential to review your credit score for any errors, as these can negatively impact your credit score. Look for incorrect personal information, payment defaults, or other mistakes that could be dragging your score down. If you find any errors, contact the credit reporting agency and have them corrected ASAP. And number 3, guys, take steps to improve your credit score. If your credit score is not where you want it to be, there are several steps you can take to improve it. These include, number 1, paying your bills on time. Late payments can negatively impact your credit score, so make sure you pay your bills on time, guys. And number 2, reducing your debt. If you have high levels of debt, this can also negatively impact your credit score. Try to pay down your debts as much as possible before applying for a home loan, especially credit cards, personal loans, you name it. And lastly, number 3, limiting your credit applications. Too many credit applications can actually make you appear risky to lenders. So try to limit the number of credit applications you make. And if you made it thus far to this part of the video, congrats, you're a serious property researcher. Here are 5 bonus tips on how to read an Equifax consumer credit report. Number 1, understand the abbreviations. When you first look at your credit report, you may be overwhelmed with all the codes and abbreviations. Some of the common abbreviations you may come across include CR, which means credit, CCJ means county court judgment, DR means default, AR means arrangement to pay, I means installment, O means open account, and M means mortgage accounts. Guys, know what these abbreviations mean is essential in understanding your credit report. For example, a CCJ can negatively impact your credit score, and an AR can show that you're actively trying to repay your debts. Number 2, look at your spending patterns. Your credit report will also show your spending patterns, including how much credit you have available, how much credit you're using, and how many accounts you have opened. Lenders look at this information to determine if you're a risky borrower. And if you're having too many accounts open or you're using too much of your available credit, lenders may be hesitant to lend you money. Number 3, understand your credit score. Your credit score is a 3-digit number that ranges from 0 to 1,200. The higher your credit score, the more likely you are to be approved for a home loan and the better interest rate you'll be offered. So Equifax breaks down the credit scores into tiers, with the top tier being excellent, which is 833 to 1,200, and the bottom tier being below average is 0 to 509. Understanding your credit score is essential in determining your eligibility for a home loan. Number 4, pay attention to color. Equifax uses a color-coded system to help you quickly identify any negative information on your credit report. Red indicates negative information such as late repayments and defaults, while green indicates positive information such as on-time payments or paid off debt. Paying attention to the color coding can help you quickly identify any areas that need improvement. And finally, bonus tip number 5, employment history and living address. Equifax also captures your employment history and how long you've been living at your current address. Banks and lenders look at this information to determine your stability as a borrower. For example, example, if you've been at the same job for several years and have been living at the same address for a while, lenders may see you as a stable borrower and they are more likely to approve your home loan application. So overall guys, understanding your Equifax credit report is essential in preparing to buy your first home in 2023. By understanding the abbreviations, looking at your spending patterns, understanding your credit score, paying attention to colors, and being aware of your employment history and living addresses, you can increase your chances of being approved for a home loan with a competitive interest rate. So in summary guys, checking your credit score is an essential step in preparing to buy your first home in Australia. By using the free credit score service if you have no access to a mortgage broker, or just contacting a mortgage broker to get a free credit report, reviewing your credit report for errors, you got to remember, however way you go get the credit report, you need to review your credit report for any errors, and taking steps to improve your credit score, you can increase your chances of being approved for a home loan with a competitive interest rate. And remember guys, if you love this video, give it a thumbs up, subscribe if you haven't subscribed, hit that bell notification so that you can get notified for my next video. And in the meantime, keep calm and mortgage on.